Hello everyone and welcome to training series number 1. This training is specifically catered to loan officers, but there's also some information in here about our program guidelines and some other requirements that you will likely find useful even if you do belong in a different department. One of the common misconceptions that we often hear is that the Chenoa Fund is the name of our company. That's actually not the case. The name of our company is CBC Mortgage Agency, and the Chenoa Fund is the name for the suite of products and programs that we offer to borrowers in need of down payment assistance. CBC is short for Cedar Band Corporation, which is a reference to the Cedar Band of Paiutes, a Native American band local to Utah, which actually owns CBC Mortgage Agency. Because we are owned by a Native American band, we are considered a government entity, which explains why we're able to offer the types of products that we do. In the following slides, we will be going over different program guidelines as well as different ways for borrowers to qualify for these programs. To start, we did want to reiterate that the Chenoa Fund is subdivided into 3 different programs, 2 of which are FHA and 1 of which is conventional. And each of those programs has 1 to 2 products apiece. The Rate Advantage and the DPA Edge programs are issued in conjunction with FHA-insured loans, while our conventional products are obviously issued in conjunction with conventional loans. Another common misconception that we often hear is that all of our programs offer forgivable second mortgages. In reality, only the DPA Edge program, which is an FHA program, includes a forgivable second option, and that only represents 20% of all of our total products. We mentioned the Rate Advantage program previously. We do offer that to provide a lower interest rate for the borrower and to provide a better YSP for the lender. The Chenoa Fund is offered in all states except for New York, so if you have a license to work in multiple states, do know that the Chenoa Fund guidelines do not vary from state to state. All of our programs do offer 3.5% for the second mortgage, while upfront fees are limited only by the 3% points and fees rule. Do note that in every instance, the first mortgage must be sold to CBC Mortgage Agency following the close. And again, this is because we are not a traditional state-run DPA program. And at the time you sell your first mortgage to us, the down payment funds you advanced for the second mortgage will be reimbursed. You are considered a delegated underwriter, so your underwriter will be the individual underwriting the file, which is a benefit because we do not have an underwriting review process on our end. For most approved property types, these will include single-family residences, but we also do allow PUD, townhomes, condos, attached, detached, and modular homes. However, do note that manufactured homes are not allowed underneath this program, and HPML is allowed, but no high-cost mortgages. In regards to borrower qualifications, we will start with Fannie Mae's Home Ready program and the conventional standard 97 LTV loans. As a note, in order to use conventional products, you must be Fannie Mae approved. Neither the Chenoa Fund, CBC Mortgage Agency, nor any of our products are approved by or affiliated with Fannie Mae. It is the originating lender's responsibility to ensure that the use of CBCMA second mortgages, the use of CBCMA first mortgage, and combination of the CBCMA first and second mortgages are compliant with Fannie Mae requirements. CBCMA's correspondent guidelines include additional overlays to the Home Ready program, and do keep in mind that both Home Ready and DU are registered trademarks of Fannie Mae. The first program we're going to be going over today is Fannie Mae's Home Ready product. If you've used Fannie Mae's Home Ready product in the past, these guidelines are going to look familiar to you, but I will go over them one by one for your benefit. For Fannie Mae's Home Ready product, there is no borrower investment required. This is for single families only. There is no income limits in low-income census tracts, but there is 100% of area median income in all other census tracts. The program is purchase only. All borrowers must have a minimum FICO score of 640. There is a 30-year fixed-rate mortgage. The second lien is a 10-year fixed-rate mortgage with an interest rate 2% higher than the first mortgage. The MI coverage is 25%. The DU only $297. Concurrent homeownership is allowed, and this product does require the borrower to take a homebuyer education class. As for the conventional standard 97% LTV loans, there is no borrower investment required. It is for single families only. There are no income limits. It is purchase only. All borrowers must have a minimum FICO score of 640. There is a 30-year fixed-rate mortgage. The second lien is a 10-year fixed-rate mortgage with an interest rate 2% higher than the first mortgage. The MI coverage is 35%. The DU only to 97. Concurrent homeownership is allowed, but at least one borrower must be a first-time home buyer, and there is no home buyer education class required. Next, we'll be moving into our FHA suite of products, which includes the Rate Advantage program. Incidentally, the Rate Advantage program is also the Rate Advantage product, so if I use the terms interchangeably, that's because they are one and the same. Our Rate Advantage program is the most complex and most restrictive FHA product that we offer. However, as the name suggests, we do believe that this will offer you the most advantageous rate. For starters, in order to qualify, the borrower must have a qualifying income of less than or equal to 115% AMI. This program does require a monthly payment. The FICO score does go down to a 640 minimum, and the second mortgage will have a 10-year term with an 8% interest rate. As some other notes, non-occupant co-borrowers are not allowed with this program. Concurrent homeownership is not allowed. The max DTI is 50%, and manual underwrites are not allowed. Next, we'll be moving into our final FHA program, the DPA Edge Program, which includes the soft second and the repayable second products. The DPA Edge program has some distinct advantages, including the fact that only qualifying income is used for AMI calculations. The FICO scores do go down to a minimum of 620, lower than any of our other programs. Non-occupant co-borrowers are allowed with this program, and the DTI is per AUS or FHA manual underwriting guides. As for some overlays compared to normal FHA products, the DPA Edge is only offered for single-family and 2-unit properties, while 3 to 4-unit properties are not allowed. For our soft second product, borrowers can qualify by having an income that's less than or equal to 115% AMI. There is no monthly payment, as the soft second is forgiven after 36 consecutive on-time payments on the first mortgage. The borrower does have the full length of the 30-year term to make up those 36 consecutive on-time payments, so even if they do not make those consecutive on-time payments within the first 3 years of their mortgage, they still have the remaining 30 years in order to be able to pull together those 36 months of consecutive on-time payments. If for whatever reason they are not able to make those consecutive on-time payments, they will owe the full price of the second mortgage to CBC Mortgage Agency in full. As a note, the FICO score does go down to a 620 minimum for this program, and the mortgage is a 0% interest rate with a 30-year term. Our second DPA Edge product is the repayable second. This product is for borrowers with a qualifying income of greater than 115% AMI. As the name suggests, this program does require a monthly payment. The FICO scores still go down to a minimum of 620, and you will have two options for terms on the second mortgage, the first being a 10-year term with a 0% interest rate, and the second being a 30-year term with a 5% interest rate. If you have only been using the audio prompts to engage with this presentation, I do recommend you take some time to study this quick comparison matrix and its visual element. This quick comparison matrix does take all of our different products and quickly runs down their differences. Section A shows how much we offer for the down payment. B shows the type of second mortgage. C shows the term. D shows the minimum FICO score. E shows the income limits. F shows the DTI restrictions. G shows the types of homebuyer education required. And H shows the MI coverage. If you go to chenoafund.org and click on the Program Guidelines link at the top of the page, you will be taken to a more detailed version of our program guidelines, along with a more detailed version of our product matrix. Next, we will be going over the standard of CBC Mortgage Agency in regards to calculating area median income. We are aware that there are many different options and opportunities for you to calculate area median income out there. However, this is the method that we use when determining if a borrower qualifies for a specific program or not. And this is the method we will use to approve your borrowers for the different programs. And so we do ask that you use this method. If you choose to use a different website, do note that while your borrower may qualify for a specific program using that other website, this is the website that we do ask that you use instead. So if a borrower ends up not qualifying because you did not follow this method, it may cause more delays or pushbacks that you probably aren't looking for when you are trying to qualify a borrower for one of our programs. With that in mind, let's just jump into it. This is a third-party website. This is the HUD Area Median Income website. You can see that link there in the slide. When you reach that page, you will want to select the most recent fiscal year, and then you will want to click the Click Here for FYIL Documentation button. You will then be taken to a page that looks like this. First thing you want to do is select the relevant state, and then you want to select the relevant county. For the sake of this example, we are using Arizona and Maricopa County. Once you do that, you will want to click on View County Calculations. As another note, this is a third-party website, so our state restrictions still apply even if you do see the option here. For example, you will find New York as one of the options on this pull-down menu. But obviously, we currently do not allow our program to be utilized in New York. There are actually two different ways to calculate the area median income. This is the primary method, and this is for families with a size of 1 to 4. First thing you'll want to do is you'll want to pull the number from the median family income column. Where you'll find this is outlined in red on the right. You can then determine RAMI by multiplying that median family income by 115%. So for this example, you take $69,100, you multiply that by 115%, and you get $79,465. There is an alternative method allowed within the underwriting comments on the 1008. This is for families with a size of greater than 4, so families who have 5 individuals or up. First thing you want to do is you want to locate the appropriate family size underneath the Persons and Family column, and then you'll go down to the Very Low Income Limits row. First thing you'll do is you'll find the appropriate income limit and then multiply that number by 2, and then you will multiply that number by 115%. I grew up in a family of 6, so what I'll do is I'll take 40,100 and multiply that by 2 to get 80,200. I'll multiply that number by 115%, and then I'll get 92,230. Next, we'll be moving into the pre-registration section. There are some important things to remember about the 1003. Both the first and the second mortgage do require a full set of TRID-compliant disclosures, which should include the 1003, the LE, the initial CD, and the final CD. For a comprehensive list of all the documents we require the borrower to sign, we do ask that you refer to our program guidelines, which can be found at chenoafund.org. When you are filling out the 1003 for the first mortgage, you will want to list the secondary financing on the 1003. If you look at the screen there, you will want to indicate the amount of the subordinate financing underneath Section 7, Item J. When you're filling out the declarations page for the 1003, don't forget to indicate underneath Section H that part of the down payment was borrowed. When you are reflecting secondary financing in DU for the first mortgage, you will want to indicate that the source of the down payment is an other type of down payment. For the explanation, you will want to put either CBCMA or CBC Mortgage Agency. Again, as a reminder, we are not the Chenoa Fund, so please do not put Chenoa Fund in the explanation, as the Chenoa Fund is the name of a product and not the name of our company. When you are reflecting secondary financing in DU, we do ask that you use Special Feature Code 118 when running your conventional loans. This can be found underneath the Additional Data screen in DU. If you are using LP, as you see on the screen, this is what you will see if you are using the LP system. And again, for the asset identifier, we ask that you put down either CBCMA or CBC Mortgage Agency instead of the Chenoa Fund, because again, the Chenoa Fund is a product and not the name of our company. On that closing disclosure for the first lien, you will want to list the DPA as CBC Mortgage Agency's second lien underneath Section L04 or underneath Other Credits. As some important reminders, you must remember to deliver disclosures to the borrower following trade guidelines. The LE must be mail stamped or signed by the borrower within 3 days of the 1003, and digital signatures are acceptable. As you are preparing packages, do make sure that you upload these commonly missed files in order to avoid added conditions. In the credit package, this includes the soft pull of the credit report within 10 days of close, the case query to show the UFMIP is paid, the appraisal logging, both the first and the second mortgage 1003s. In the closing package, the MRI FOL, the first note and the deed of trust, and the second note in the deed of trust. And as a reminder, the FOL stands for Funding Obligation Letter. We wanted to quickly go over the features and benefits for our conventional products. As a reminder, CBC Mortgage Agency is a government entity powering the Chenoa Fund, a tool designed to help increase home ownership. This is accomplished by offering qualified borrowers down payment assistance in the form of second mortgages, resulting in zero down payments. Saving for a down payment is the #1 obstacle to home ownership. Some features of the conventional program includes the fact that DTI is based on AUS findings, which does give you increased purchasing power. There is no first-time home buyer requirement above a 640 FICO, which gives you simplicity. The program can be used in any city in any state, New York excluding, and this gives you the power to purchase where the customer desires. This also gives you market rate first mortgages, which will offer a lower payment. The funding is stable, continuous, and non-bond, which gives you a knowledge that funding will always be available. And we offer SRP and SYP flexibility, which will give you profit flexibility. No matter your current relationship with the DPA, now is the time to increase loan volume, qualify more customers, and experience fewer dropped loans. Chenoa Fund is provided by CBC Mortgage Agency, an FHA-approved government Title II lender. HUD statute allows government entities to provide down payment assistance. Chenoa Fund is the premier DPA that offers simplicity, ease, and options that can help you and your customers accomplish great things in home ownership. All industry guidelines apply. These marketing ideas can generate interest and phone calls from consumers and real estate agents. Don't forget to check out our lending guidelines. Moving into the features and benefits of our FHA offerings, CBC Mortgage Agency is a government entity powering the Chenoa Fund, a tool designed to help increase home ownership. This is accomplished by offering qualified borrowers down payment assistance in the form of second mortgages, resulting in zero down payments. Saving for a down payment is the #1 obstacle to home ownership. Some features of our FHA offerings include the fact that the FICO can go down to 620, which makes it easy for borrowers to qualify. The DTI is based on AUS findings, which means there is increased purchasing power. There is no first-time homebuyer requirement above a 640 FICO, which offers simplicity. The program can be used in any city in any state, excluding New York, which gives purchasing where the customer desires. There is co-borrower assistance with a non-occupant co-borrower, which offers qualifying options for the family. There are no income limits, which offers a streamlined process. We do offer a market rate first mortgage, which will give a lower payment. There is stable, continuous non-bond funding, which will give you a knowledge that funding will always be available. And there is SRP and YSP flexibility, which will give you profit flexibility. No matter your current relationship with DPA, now is the time to increase loan volume, qualify more customers, and experience fewer dropped loans. Chenoa Fund is provided by CBC Mortgage Agency, an FHA-approved government Title II lender. HUD statute allows government entities to provide down payment assistance. Chenoa Fund is the premier DPA that offers simplicity, ease, and options that can help you and your customers accomplish great things in home ownership. All industry guidelines apply. These marketing ideas can generate interest and phone calls from consumers and real estate agents. By way of close, we did want to offer you some important resources for being able to find answers to any questions that you may have. If you're not sure where to turn for information, do reach out to info@chenoafund.org. However, do note that this is an information hotline, and often the info box will just redirect you to one of the other emails on this page. If you have any questions about our portal, do feel free to reach out to submissions@chenoafund.org. If you have any questions regarding underwriting, please reach out to scenariodesk@chenoafund.org. If you have any purchase clearing questions, do contact the purchase clearing specialist for the specific loan that you're working on. If you have any questions regarding collateral or shipping, you'll want to reach out to finaldocs@chenoafund.org. And if you have any questions regarding servicing, please do feel free to reach out to servicing@chenoafund.org. Thank you for choosing the Chenoa Fund, powered by CBC Mortgage Agency.